This week coming up is important. Let's talk about 1 in 37 homes being seriously underwater. What the heck does that mean? What is the trend? Are we in trouble? Where is the pain? Let's talk about a horrible consumer sentiment number with a massive drop. And of course, we will highlight the week ahead. There's a lot of stuff going on next week, folks. Buckle up, pay attention. It could be really market moving. So we'll talk about that more in a minute. Why don't we just jump into the topic at hand? 1 in 37 homes is seriously underwater. What does that mean? The definition of seriously underwater is it's quite large. It's 25%. So 1 in 37 homes is 25% or more underwater. For example, the debt is 100 grand and the value of the home is 75 grand. This is a problem. This is when people walk away. This is when you have jingle mail. This is a problem. But okay, great. It's a factual statement that we were 1 in 37 homes. But Michael, we're smarter than that. Tell me the trend. Tell me where we've been before so we have scale. Well, good job. We rose from 2.6% of homes seriously underwater to 2.7. Now, if we step back and look pre-pandemic, so 2019, I bet you wouldn't have guessed. In 2019, 1 in 15 homes were seriously underwater. So we were at 6.6%. So again, folks, don't let the doomers scare you by quoting things that seem alarming. Yes, it is factually correct, but you and I both know they were only sharing those numbers to scare you. So where is the pain? I actually thought this was more interesting because when I hear about seriously underwater, my brain went to Austin or Florida or something like that. But if you actually look at the numbers, and you can go look up on X, Liz Ann Saunders put this particular tweet thread together. Kentucky had the largest growth. Kentucky had 20,501 homes go seriously underwater for a total. So all of Kentucky, 58,325. Kentucky. I think of Kentucky as a boring market. That's just me. There are 25% of homes in Kentucky that are underwater. How does that happen? So what I think about, and again, I don't know this for sure, but logically speaking, you're in a market that's kind of boring and flat, and you go 25% underwater in Kentucky? I'm guessing we have some natural disasters, maybe hurricanes or tornadoes or something that comes in and damages these homes. And then they get stuck in this kind of mess. So they're damaged and I don't know. I'm just guessing. If you invest in Kentucky, let me know. What the heck is going on in Kentucky? Kentucky has the most underwater homes or grew the most. Technically grew the most. Crazy. Alrighty, folks. So again, seriously underwater, it is a problem. I mean, you can't think it's not, but we're not even back to 2019 levels, which was 1 in 15. So again, don't let the doomers quote facts and then mislead you. Scratch that a little bit and move forward. Next up, Bloomberg. Bloomberg put out an interesting article that I had not thought about. And that is, don't look at housing today. Why don't you think about what housing might look like in 2030? I thought that was an interesting riddle because when I think about housing 2030, think about that. That's roughly 5 to 6 years from now. Everybody, you and I are 6 years older. We probably have millennials aging in or wanting to trade out of homes. So I wonder what that looks like. Because right now we are clearly seeing home builders build smaller homes. I think for the next 2 to 3, 4 years, we're going to see the average size of homes fall. But I wonder what that leaves us in 2030. Not sure. I'm not sure. But again, I thought that was an interesting thought process. Even in 2030, think 2035, think a decade from now. What does the housing market look like in a decade? Gen Z is likely into prime buying years. I don't know. It's just an interesting thing. Alrighty, folks, let's talk about consumer sentiment. Consumer sentiment on Friday was a disaster. Just a disaster. And as I have said for 5 years, I study the consumer. The consumer drives the economy. If you can figure out what's going on with the consumer, you can really make some moves. So let's get into the numbers. Consumer sentiment last was 77.2. Again, folks, these numbers don't mean anything. What you are looking for is range and rate of change. So last was 77.2. It was expected to go down to 76.2. Supposed to go down 1%. Actual 67.4. That is a massive drop. The consumer is not happy. The consumer is getting conservative. We're going to start to get some retail numbers next week from Home Depot and Walmart and others. It could get ugly. It could get ugly. The other thing that was in the consumer sentiment is you and I are expecting inflation to get worse. We have seen the start of this year, inflation expected to get worse. And we get another inflation print this week. We get PPI on Tuesday and CPI on Wednesday. More on that in a minute. But yeah, it's the consumer sentiment is, all I got to say is Jerome Powell was probably like, whew, yeah. Glad we didn't raise rates last week, because again, this could be the sign that often called recession is starting. The consumer can cause a recession all by itself. All by ourselves, we can cause a recession, and that kind of drop in consumer sentiment is a problem. Alrighty, folks, let's talk about next week. Next week's a big week. A lot of Fed speeches. We're going to find out which Fed president is hawkish and which is dovish. By my count, we have 2 Fed presidents. That was what I was always hoping for 2 to talk about the threat of going higher. Again, I don't think they will. I just want them to have the threat of going higher. We're going to see if anybody else jumps on that board. We also will get Powell speaking. Powell will also have a speech next week, not just the other 18 Fed presidents. So on Monday, we have 2 Fed president speeches. Tuesday, we get PPI. And 2 Fed speeches. Tuesday is when Powell will speak, so he's one of those 2. Let's talk about CPI. CPI is Wednesday. The headline last was 3.5. Expected to go down to 3.4. CPI core last was 3.8. Expected to go down to 3.6. Yeah, I don't know. The base effect, as I recall, this month is pretty small. I'm going to take the over. I don't have a good feeling about this CPI print. I think the market is hoping for it to go down. I mean, if it just stays flat month to month, that's a problem. We have the market leaning towards falling because we've been on a 3-month uptick. Wednesday morning, buckle up, is important. On Wednesday, we also get retail sales. I don't expect retail sales to be great. Look at consumer sentiment from Friday. Retail sales Wednesday is a big deal. Is the consumer saying one thing and acting another way? Possible. We do that all the time. We act, like it's getting bad out there, but we still go shopping. We'll find out. Retail sales on Wednesday. Thursday, we will get weekly unemployment claims. This one's important. Remember last week, we got this one number that popped like 25,000. Was that an aberration or is it the start of a new trend? Thursday will be important. Also, 4 Fed speeches on Thursday. And then Friday, U.S. leading economic indicators that are actually expected to be negative. They're expected to be negative 0.3. I think it could be worse than that. So again, lots and lots of stuff going on, folks. Don't forget, today is Mother's Day. It is Mother's Day. Do yourself a favor. If you can, give your mother a call. I will be calling mine sometime later this afternoon. Take your wives out, take care of them. If if that is on the agenda as well, Olivia and I will be going out as well. Another couple of things that I'm really proud of. I've been working on something in the background for about 6 weeks. It's something that will allow me to take this amazing community that we've built over 5 years and allow you to get even more intimate with the millionaires that come on this channel. What am I talking about? I just launched a school community. I'll put the link below once this is done recording. And what I'm trying to do in this community, and I've already scheduled 2 meetings, is I want you to be a part of the interview. Now, you could just sit there in the audience if you like to watch and listen live. You can also interact. You can also ask questions. So we're going to try this on Wednesday at 8 a.m. Everybody in the community can join the 3 amigos. Dion, Lumberjack, and I always talk Wednesday at 8 a.m. Now if you're in the community, you go to the calendar, you can join. The Zoom link is already there. If you want to ask us a question, if you want to just see how we really roll, you can join the party there. In addition, I'm going to do at least a monthly live Q&A, and I've scheduled that for next Sunday at 8 a.m. I want to get back to doing lives. I want to do it in a controlled community. So again, lots of stuff coming. There's already some free courses there as well in the community. I think there is something there by managing a calendar, video, and Zoom that I can join all of us together, and even we could just all grow. And again, because it's a community, you can put posts and questions and network and all of those things. So again, that's something I've been working on, and I just announced it yesterday. I'll put a link below. But again, I know a lot of you want to ask questions, so this is my way. So this week we're doing it very low stress. Dion, Matt, and I. Who do you want next? Do you want Anna or Jonathan or Omar or Ty or the uneducated economist or Jason? This is going to be the place where you can get around other legends. I think that's going to be pretty cool. So I don't know. Maybe I'm wrong, but that is something that's really cool. And then finally, don't forget the Zuber letter. We released the Zuber letter for the 3rd week last week, and we are working on a spicy newsletter this week. So go to zuberletter.com, put your email there so you can get this spicy one coming. So it's going to be a lot of fun, folks. So again, folks, I appreciate you. Happy Mother's Day. I will put the link below for the community so you can go check it out. Let me know. Let me know what you think. Take care. Have a great day. Later.